So let's remind people, right? Our first interview way back in the day, what became known as the truck in the toolbox story. You talked about how you started your entrepreneurship journey. So if you were coaching somebody up, or maybe if you want to, pretend like you're starting today in October of 2022, what are some things you thinking about getting ready, or coaching somebody up to get ready to invest in themselves, or how to move forward as they're starting their journey? What would you tell them?
Yeah. So it's all about education. So you have to educate yourself, build yourself, develop yourself, pour into yourself constantly, and in a lot of different ways, no matter what you're getting into. But from an enterprise standpoint, I mean, there's a lot of things you can do now that were not available when I was in business and when I was starting out, 30 years ago, that you can scale much faster. You can, succeed much quicker and better. And depending on where you're at and what stage you're in, I've got people I work with at all different stages, some just starting out, some scaling, some pivoting, shifting, whatever. Number one is focus on your strengths, go with your winners, cut your losers, become, you got to lean out your operation, become efficient. If you're looking to do something new, whatever that is, become the expert at it, pour yourself into it, immerse yourself, sacrifice everything else you need to that's non-productive in your life, and focus on the thing you need to in terms of, work and curriculum and things like that, and get after it and become, the expert in that space, the go-to in that space, and know everything you can about it, because that's where, all those resources attract. Surround yourself with the right influences in all of the media that you consume. Surround yourself with the right influences in terms of people you hang around. And if you're in a business and you want to get somewhere, go find the best in the world doing what it is that you do, and then go hire their top people to do it for you and with you, or go work for them if you can, even if it's for free when you're young, to learn and grow and those types of things. So, I mean, those are the things that I did along the way, to learn and to grow and to do what I did. And man, I wish I would have known more back then. It's all about what you know and who you surround yourself with. And I just didn't know what was possible back then in terms of how to really, I could have done tenfold what I did if I'd have just known a little bit more. And I thought I was, learning as much as I could, as fast as I could. But it's just, there's just so many different levels. And the deeper you go, the deeper you find you can go. And the more you know, the more you realize you don't know. I mean, it's just pretty amazing.
Yeah, there's so much in that I want to just touch on individually. First, I want to touch on this kind of, for me, it's rule number 7 in my one rental at a time rules, and that's monitor your network. I think it's even more important today in a social media environment, where it is the algorithms that seem to dominate our feeds really gear around negativity. And I don't think you need any help being negative. I think you need to find positive people that are looking to move forward. That, yeah, we understand it's a bad time, but we don't have to grind, and it doesn't
But
have
you
to be
can
in our
fix that.
face.
So I don't have that in my feeds. Okay. So like
Yeah.
number one, my YouTube channel, because of the bots and stuff, and just said, I don't have any comments on. I turn them off. I just disable comments. I don't, pay attention to them and ignore them. And, my feed, the things I'm looking at are positive. So I don't go and look at negative stuff. And that doesn't feed into my feed. I mean, I see puppies and kittens and happy stuff and people that I follow that are positive influences. It's really funny because, you see the cute little dog thing and you stop and you watch. Next thing you know, you see a bunch of them coming up.
Yeah, exactly. Yeah.
So
That's
I'm
my
cracking
point.
myself up.
Yeah, that's exactly my point. Is, folks, you are not curating your feed. Many of you send me videos of other channels that are just total trash, clickbait, fear porn. I don't watch that stuff.
Yeah,
I
why watch
block
it?
them.
It's silly.
Why? It's silly. So yeah, take care of that stuff. And again, for me, when I created rule number 7, it was really to realize that some of my friends needed to change. But today, because of social media, those algorithms, they're like one of your best friends. They know you better than you. So some of you have to consciously block and change your feed. And if it's kittens and puppies and happy stuff, you need battery chargers, not battery drainers, I think, as Ed Milet says.
Now, I don't
So
sit around and look at that stuff, but like if something pops up and it's kind of interesting, like animal stuff you see out there,
love it. I'm a
bears
dog
in
guy.
nature dancing, and I mean, it's like, what the heck, man?
Yeah,
So
what
I'll
the hell?
watch it for a second when I'm looking, but mainly what I use social media for. So I have my YouTube channel. I'm sharing my expertise and things like that. And
Awesome.
what I noticed is, especially with markets and crypto and stuff, there's just so many bots and scammers and all that. I just turn the comments off because I just don't want people getting caught up in that. And it's not even worth my time filtering it. It's silly.
Yeah.
And,
Yeah.
your channel too, you'll get some comments that are just
Oh yeah.
silly, it's just like delete them, block them, don't even pay attention to them. And, I have zero toxicity that I allow into my life. But with Twitter,
Nice.
I can keep up with news, financial news, a lot of analysts, experts, things like
Yeah.
that I'm following. And then these little things will pop up in between, they're kind of cute. That, I'll just catch myself, just
It's
laughing
fun.
out loud at these things.
Yeah.
LinkedIn's a professional network, I'm not
Sure.
on there doing anything but, posting content, and, people are connecting with me there. And, Facebook, same thing. I'm just sharing content and expertise. And I have zero toxicity on any of my stuff because I just don't engage with it. And then YouTube,
That's
same
awesome.
thing. If I see a channel that's interesting, and you can tell by the thumbnails and the titles what it is, and the same people are putting out the same garbage every day. And the
Every
thing
day.
is, and it can go the other way too. There's people out there still talking about melt ups and going to 6,000 on the S&P and these crazy numbers, and Bitcoin to 500 grand and all that. So
Yeah.
you've got both
Tomorrow,
ends
500 grand tomorrow.
by the end of the year. I mean, you've
Yeah.
got both ends of those spectrums. And
Yeah.
I mean, and you got to understand, like we said last time, you got to qualify where the info is coming from. If you've got a fund manager out there who's talking about a melt up and, Dow S&P 6,000 by the end of the year and all these crazy things, well, because they're trying to keep money flowing into their fund, because that's how they make their money, on fees. When you have people begging the Fed to stop and writing open letters to the Fed to stop raising interest rates, and they're going to destroy the economy, it's the end of the world, it's because they're losing money, they're facing withdrawals, and they're not making any money. They want to hit their bonuses by the end of the year. So you got to qualify where this information is coming from and what they have, to gain by putting out the information they're putting out, and understand it's business cycles.
Yeah.
There's, peaks and there's valleys, and you need good risk management. You need to understand where you are in the cycle and, what the real risks are out there, but you got to qualify all that.
Thing you talked about, again, I want to touch on more is sometimes you just need to lean out. There's a lot of people, certainly in the real estate industry, it was easy to make money the last couple of years. And sometimes these entrepreneurs who haven't experienced the crisis that you and I went through, they just keep adding more and more people, more and more tools, more and more this. They keep increasing their spend. And, now you go into a bad cycle where, like we did in video one, where inventory is not moving, and you just that overhead could really sneak up on you. So leaning out and understanding where you are, not stopping, obviously, but leaning out is sometimes hard for people.
Yeah, you got to trim when the time comes to trim, and you have to be pay attention to what you're spending on marketing and things like that. And especially in real estate, I mean, rates went from 2.5% to 7% in the last 4 months.
Yeah,
So
crazy fast.
It hasn't had the effect on the market like you would think it would, because a lot of people are locked into those low rates. They're in good positions, financially, they have good jobs, things like that. And there's just no inventory. We lost inventory, obviously there's different areas, are different in different pockets, but my area, there's still nothing, I mean, we're in a very small market, but other areas around, you're starting to see, like Austin, Texas, and Florida, some of the big. So what was really cool was all the pandemic markets that everybody flooded into. Those are the ones taking the biggest hits now.
Yeah, that in the iBuyer markets, like Phoenix, iBuyer, like Open Door, they like 2,000 inventory last time, or maybe 1,800. It's the markets that saw the biggest run up, like Phoenix, because the iBuyers will see the biggest pain once the iBuyers give up.
Yeah, it's really interesting. And then, there's been some stuff in the news lately about people pulling back, builders, developers pulling back on build for rent product and things like that, and that's all a function of financing.
Yep, totally get it. The other thing I wanted to ask you about, we've talked, about stacking cash, or, cash is trash, cash is, is a good thing. If you're just an ordinarily worker, you're not an entrepreneur, is now the time to stack cash, not only for emergency room reserve, but so you can make moves in the future when things eventually bottom out and the Fed says they're going to pause or maybe cut in the future. Is stacking cash important in an environment like this?
Oh yeah, I mean, this is not the time to be taking big bets and big risks right now. We're not there yet, and like I said, until inflation starts to come down and the Fed talks about pausing, you need to be careful and just stack up and be ready to go. That's the other thing too. A lot of people, just because of what we've seen the last 2 years, everybody's got FOMO. They don't want to wait. There's not a lot of patience out there. Sometimes the best deal that you can do is not doing anything at all. And, everybody feels like I got to be in the game, because that's the Wall Street narrative: buy the dip, time in the market. You hear all these narratives, time in the market's better than timing the market, but
Yeah.
you hear the most successful investors of all times, Warren Buffett, Paul Tudor Jones, they make their moves at the bottoms, and in bear market cycles. They're not making their moves at the tops.
Yeah. It's funny when you think about Warren Buffett. I mean, I don't know if you remember this. If you thought about it, I'm sure you would. About 2 years ago, David Portnoy from Barstool Sports was making fun of Warren Buffett, saying this game's easy, it's rigged, I can do this, that, and the other thing, which worked for a minute. And then he got smoked. Warren Buffett, wasn't doing anything. And then suddenly at the bottom, he starts moving. He makes big moves, right? And I still remember Warren Buffett getting Goldman Sachs in the Great Recession to give him like 10% interest plus warrants, and he made like a gazillion dollars on that. So there's something to be said for stacking cash, and he really means it. When there's blood in the streets, that's when you run in. So it's funny to watch
JP
people.
Morgan, they've got trillions of dollars on the sideline,
Yeah,
Goldman,
1.2 trillion cash.
Yeah.
Wow. Crazy.
Yeah. So the time is coming, and it's not now. And that's the thing, is that people get sucked into the narrative because of the Wall Street, investment managers that need to make money, telling everybody time in the market, dollar cost average. I mean, you hear that a lot in crypto. Buy Bitcoin every single day, every single week, no matter what the price is. That's the dumbest advice you could ever get. I mean,
what's it, 19,000, I think today, something like that, roughly.
Something like that. But just the whole mentality of don't look at the market, don't look at the economy, don't look at it, just buy. I mean, that's just silly. That's just terrible advice. You need to do what's right for you. You need to pay attention. You need to understand the macro, and you need to understand where we are in the business cycle if you're going to be an investor. And there's a lot of different ways to invest, right? That means a lot of things to a lot of people. When you put capital at risk, you're investing, regardless of the time frame. So, these whole narratives of time in the market always outpaces. Well, yeah, from the history of the markets, sure. We're still up more than, our last peak was pre-pandemic. So, we're still doing pretty good. But will we get back to all-time highs in our lifetime? We don't know. Will we get back there next year? We don't know. So, you need to base it more on your own personal financial position. You can't always be 5 years, 10 years, because, if you 5 years ago, you're breaking even,
Right. Yeah, it's funny. I went back and looked at a lot of people in real estate are talking about 2023 being just like '08. So I've done some, I have a chart or a spreadsheet I look at. It was funny. I happened to look at the spreadsheet and scroll down to the S&P 500. Now I've only taken S&P 500 January 1st of every year, right? So I didn't catch the inter-year moves. But from 2008 to 2012, the S&P 500 was down like 10 points. So just a lost 5 years. And then, of course, the .com crash, if you were in the NASDAQ, was like 11 or 12 years to come back. So, yeah, these last decade things that Stanley Druckenmiller and others are talking about are real. And if you have to retire in the wrong time, that could be painful.
That's where you got to be careful. And that's why it's okay to take profits and, put cash on the side at certain points. And we were screaming it back in November, December. Everybody called us, you're crazy. You can't time the market.
I remember.
I'm like, I don't care if I missed the top by 10 or 15 or 20% when you compare it to where you are now.
You remember the video I remember with you just nailing it. This is the one I remember. We talked about the Federal Reserve basically saying they can't trade. Remember that? That must have been like 12 months ago, 14 months ago. And you're like, they're doing that because they see something coming. And I'm like, yep. And sure enough, really close to the peak. I thought that was just such a bold and great call that you had.
Yeah, and I guess one of them didn't listen and said, "Oh, I didn't understand the rules," and kept on going. But
whoops, Bostic, yeah,
exactly. I mean, it's just crazy system.
Silly
but anyways, again, your ultimate buy and sell signals are the Fed, right? If the Fed says, "Look, we got to stop and put the brakes on," well, the markets are going to decline. If the Fed comes back in and says, now we have the inflation indicator too, but when the Fed says, "Hey, we don't have to do anymore, we can pause," I mean that's going to be a buy signal, because that means inflation has come down. I don't mean it's down a tenth or anything like that. Markets will bounce on any dip in inflation, but until the Fed comes out, and once we get inflation cut in half, basically down to about 4 or 5%, and the Fed says we can stop, that's, we're going to continue.
Stop, not cut. Stop, just pause. Yeah.
We're going to continue to, work levels lower, and we've got another 75 basis points coming up next month, most likely, unless something big changes. So, we might be getting close to trying to carve out a bottom, but if the Fed can't stop a financial, accident or crisis from happening because of inflation, I don't know how low things can go.
Yeah. When I look at the Fed, a week ago, so pre-CPI last week, I thought the Fed was going to go 75 November 2nd, 50 December, whatever it is, 14th, 25 pause. I now think that's not enough. I now think they're going to go 75, 75, 50, 25 pause. So we're going to get to 5% terminal rate, where I used to think 4.5. Am I overreacting to one number, or what do you think?
No, I mean, you got to get rates above inflation,
Yes.
the effective rates above inflation. So until those two come in line, you got to keep going, because it's not doing any good. I mean, there's still a big imbalance in employment in the labor market. There's still a big imbalance. Energy prices are going up. We're just now getting into the fall and winter, where energy is going to just crush people. I mean, the news, everybody's warning, your electric bills are going to double this winter. Your heating bills are going to double. So the warnings are coming out. We're starting to see people, Airbnbs taking a hit. People they're not traveling like they were, because they're starting to see it and feel it. We know that food has not changed. Housing hasn't changed greatly. I mean, it's starting to dip again, rents a little bit, but not like what everybody was saying. And it goes back to June, when everybody was saying, oh, we're at the bottom. This is the bottom. Inflation's coming down. We've peaked, and I mean, I was like, no, we haven't peaked. Nothing has come down. It's still going up.
I'm really nervous for CPI headline, right? Right now, the folks like Kathy Wood can say and be right. Where headline inflation's coming down, right? We were at 9.1. It's been down, I don't know, 4 months in a row to 8.1. I'm afraid now that we're heading into fall and winter that, at least in California, gas is going nuts again. We might see headline go up. And then if that happens, then you break the trend, and who knows where we go.
Yeah. I mean, gas prices are on the rise again a little bit. And, she's hanging her hat on that and on rents coming down. Rents are not coming down. I'm telling you, I work with people all over the country buying multifamily properties. And the only way the business works, especially at today's rates, you got to buy it and jack rents. So
exactly.
What they're looking at is the wrong thing to be looking at where they're measuring that. They're looking at in-place rents. Okay. So in-place rents aren't necessarily increasing because they're in place. But as soon as those renewals come up, they're jacking them, and they have to, because they're buying too high. A lot of people, not my clients, but a lot of people are out there buying too high. But everybody who's buying commercial multifamily, the only way those deals are working is by raising rents. They don't buy them and say, I'm going to lower rents. They buy them and say, I'm raising rents. And if you look at the last year, those were banner years for commercial and multifamily, and it's still booming. I mean, people are still paying unbelievable prices for some of these properties, and the only way they make them work is by raising the rents. So
there you go.
Now there might be little pockets, here or there, where you're starting to see some adjustments and people are leaving and moving out of the area. But overall, on average, those rents are not coming down.
Yeah, crazy stuff. Well, Greg, you help a lot of people all over the world. Where can people find you?
Yeah, gregdickerson.com. That's where all my info is. Go check it out.
Thank you, buddy.